Bitcoin. Allah, do you know a lot about it?
I know absolutely nothing about Bitcoin.
Well, we're going to educate you twice over because on this episode of A Dictionary of Finance from the European Investment Bank, we're going to talk about Bitcoin.
And as you can plainly hear, we know not enough about it even to have a humorous banter about it.
No. We've got nothing funny to say about this. And in fact, just because we want to make sure that this isn't a funny episode, we're going to do this episode specifically on the technical aspects of Bitcoin. So prepare yourself for blockchains and algorithms and all that kind of stuff, which just blows my mind. It blows my mind so much it's blown it into next week. And next week we'll have a second episode on Bitcoin.
Yes, where we try to talk about what some real life applications of Bitcoin might be, in the sense of how do we use that virtual currency in the real world somehow.
So you can listen to this one, and then you can come back next week to listen to the other Bitcoin, unless you're a smart person. And what would a smart person do?
They would subscribe immediately.
Oh, so then they wouldn't have to remember that next week is going to be the rest of the Bitcoin stuff. They'd just be able to subscribe, and it would appear on their smartphone. Smart being the key word there.
Yeah, exactly. And don't worry about all the technical stuff if Matt's intro kind of sounded too intimidating, because if you want to, you can cheer yourself up by listening to our extremely uneducated questions about Bitcoin, and maybe some of those will make you laugh at us.
I didn't want it to be intimidating. If I wanted it to be intimidating, I would have said, this week, Bitcoin. But I'm not going to do that. That would have been more dramatic than intimidating.
So yeah, let's just say casually, this week, Bitcoin.
Oh, yeah, Bitcoin. Nice. We've just been talking about how we're going to ask stupid questions and that our guest should bear with us. That's probably because he actually has some fairly scary powers, doesn't he? We're joined by Markus Willms, who is in the systems and data management area of the finance directorate at the European Investment Bank, but in his earlier days had some physical capacities that are quite scary. Is that right, Markus?
Well, I did some heavy lifting when I was younger, at the age of, started really early, and then around up to 23 or so.
So how much did you lift?
So that was, I weighed around 100 kilos, and I could lift 2.5 times, do squats, deep squats and stuff like that. When I do things, I go, let's say, to the max, and I really push myself. And that's what I did with sports, and that's what I've been doing with languages, and so stuff that I do. I like to push it to the limit. So
well, people have certainly been pushing Bitcoin to the limit of late. Or is it the limit? Well, that's, I suppose, what we're going to find out. We're going to talk about Bitcoin and cryptocurrencies in general. So let's start with actually saying, what is a Bitcoin? Is it even a Bitcoin?
Well, I would put it this way. Bitcoin is actually a platform or a network, as well as it is an asset and a cryptocurrency. So maybe let's start with the network part. So it's a peer-to-peer network, meaning, so if you remember in the early 2000s, you had all these file-sharing applications, Kazaa, Email, Donkey, and all these stuff. And so it is similar in the sense that all the computers which interact on that network, they have more or less the same function. So it's a network, and it's a platform. And so if I take my second point, that it is an asset, it's because if you invest in Bitcoin, then actually you invest in the platform and in the community and everything that is around with it and that goes with it. And it's also a cryptocurrency, because it fulfills really all three functions of a currency, which is a medium of exchange. So meaning for goods and services, you can buy goods and services with it. It's a store of value, which is quite self-explanatory. And it's also a unit of account. So you can count your wealth in that particular cryptocurrency.
Okay, well, let's go back to the network part first to understand it. So basically, if I invest in a cryptocurrency like Bitcoin, it means that I add my computers' power to the network, so the network becomes bigger, stronger. What exactly does that mean? What does that do? How do I benefit from that?
Right. Let's. Okay. You said invest, and on one side you said also if I participate in the network. So there are two parts of it. One is really so if you want to actively participate in the network by giving computing power to the network, or if you invest because you buy Bitcoin on an exchange and basically invest in that way. So if we look at it from the technical point of view. First of all, I think we should probably address what problems Bitcoin solves or has solved and why it is so revolutionary, I would say. So let me expand on that. Why it is revolutionary, it's really because it solves, before Bitcoin, a long outstanding problem, which is the problem of double spend. And the problem of double spend means basically if you're in the physical world, so what prevents someone to duplicate 10 euro note? The central bank gives certain paper requirements and printing requirements, printing techniques. So that's easily understood. And in the digital world, what prevents someone actually to copy over zeros and ones from one place to another? So that before Bitcoin was really, really hard to achieve, and it was actually impossible. So that's really the revolutionary aspect of what Bitcoin has solved.
So that's the blockchain part.
Let's say that is actually the Bitcoin part in itself. Yeah, and the second part of this is also what Bitcoin has brought forward is actually to come to a consensus on the network. So basically to have a common understanding that these machines have a common understanding what the current state of the network is and what the past, the history has been. And there have been consensus algorithms before, but they were never on a decentralized and untrusted network. So this is about...
Yeah, sorry. So just to take a step back, the double spend problem that you mentioned, that was the problem, how to avoid someone basically counterfeiting money.
Exactly.
And how to avoid someone doing that online. And Bitcoin solved that problem
exactly
by establishing that kind of a standard, shared information on the network.
Yes, basically by making sure that a transaction which has been done has not been done before. Mm-hmm. Okay, so that's how it has solved this. And that is the revolutionary part about Bitcoin. And it's really about moving value over the network. And before, it was not possible like this, but really since 31st of October 2009, since the white paper came out, actually this has been possible.
The white paper? What's that?
It's a white paper is basically a document which technically describes on a functional level the requirements of a new platform and a new architecture. And so that was published by an unknown author called Satoshi Nakamoto, or a group of people. It's not really known. And since then, this platform is existing and in production, really.
So you've touched there on the origins of Bitcoin, and I'd say that maybe there's two times when it has become publicly talked about. Let's say one is when it started and its early stages, all the mystery about who, or more than one person, who invented it, let's say, or developed it, and whether it was being used by criminals to avoid oversight. And then more recently, it's been the sudden explosion of the price and all the fluctuations. So let's talk about the first part of that, the origins and the shady reputation that it got at the start. Did it really deserve that?
I would say no, it did not deserve it, but there were reasons for those, for those attributes to it, or why people made those connections with it. One thing is certainly media, and then yes, quite in the beginning, it was the very, very early part was really where you could use it. The marketplace was Silk Road, and as we know, Silk Road was a legal marketplace where things were traded, and Bitcoin was used for that. But if you
things like drugs and illegal trading,
and illegal tradings, illegal services, and so forth. And but if you look at any type of technology, new technology, it's really that, illegal activity is there right at the beginning. If you look at the internet, if you look at cars, if you look any type of technology, it's because, criminals need to make use of the new technology because they're forced to react in a certain way. It's not that I appreciate this or anything. It's just a matter of a fact.
Well, I think physical cash can also be easily used by criminals, right?
Exactly.
So it doesn't mean that we should outlaw cash.
Exactly.
Although there are those proposals as well.
Yes.
But I guess the reason why this became so talked about was that kind of like cash and unlike regular banking accounts, Bitcoin accounts were not traceable.
Well, actually, Bitcoin is very, very transparent. That we have to understand, because every transaction is totally open on the network. Now, who is behind a given address, about a public key address? This takes more, let's say, more research. In regulatory matters, this goes in, let's say, in that direction to really find out who is behind a given address, and this is all what currently is in the press. So basically, anti-money laundering, KYC, to address that part. Yes, but you're right. Cash has also been used for paying for illegal services, and you brought one point up in terms of cash of disappearing. It is probably going to disappear, probably sooner than we actually think.
So, and also we should probably make clear that, does the EIB lend in cryptocurrencies?
First of all, I'd like to mention here, this is what I'm saying is my personal view, and it's not linked
Absolutely.
to the. It's not the point of view necessarily of the organization. So we're not lending at the moment into. As far as I know, I've been approached by some people. What the bank's posture is, I cannot really say. These are other people in other departments who make these decisions. But also I've been asked whether we would invest in ICOs and this type of thing. So at the moment we're not.
Yeah, and we're not borrowing in cryptocurrency either.
No.
So we're not involved in that market. But of course, since all of the financial press is talking about it, it makes sense for us to cover it here on our podcast.
Mm-hmm. We'll get into some of the technical aspects of it now, maybe like some of the phrases that we'll hear. So one is blockchain. Mm-hmm. Can we really lay out what that really means?
Okay, blockchain it's actually a data structure. So, and you will hear it interchangeably. People say, referring to blockchain or distributed ledger technology, DLT. It's more or less the same thing, but in essence, it's a data structure. It's a way how data is organized and how it is distributed over the network.
So it's a file.
No, it's not. It's well, you could closely consider it as a database. In the beginning, people were saying it's technically not really a database, but consider it as a database if you like. You cannot query it like SQL or things like that, but SQL. But it is still, let's say, a distributed database, a distributed ledger, one large book, if you like. So, and Bitcoin was really the first implementation of what's known today as a blockchain. I would say we're today at least at version 3.0 of blockchain technology, if not even 4.0, depends on how you see it. But so coming back, what it is technically speaking, I'd like to first explain what a hash function is in brief terms. Mm-hmm. So a hash function is a mathematical function, and if you think of a hopper, I think that's the English word for it. Yeah.
Okay.
A hopper.
Yeah.
Mm-hmm. So you have variable length input on top, and fixed length output at the bottom. Okay. So if I put 5 liters in a hopper, it will come out 5 liters at the bottom. Okay, and I appreciate that. But just physically think. Okay, you have one fixed size at the bottom. A hash function, but it also is basically whenever I change something of the input, one bit, the output is different. And the consequence of that means that if I want to know what the output is, I need to guess the input over and over and over again. And this is actually it's part of the algorithm which is used in Bitcoin, which is called proof of work, which uses hash functions. So this is one part of it. Another aspect of hash functions is basically the output is easy. You can easily actually verify the output, but you have to guess more or less the input, and that takes computing power, and that actually takes a lot of resource, a lot of electricity. So having said that, one of this function how Bitcoin works and how Bitcoin makes it secure is by taking something from the real world, from the physical world, which is electricity, burning that, and then actually converting that into the digital world. But this is just the consequence, and this is just how to make the network secure over time. It's not I would say it's not the reasoning, but it's part of how it's been designed. It's basically what it prevents is that someone can change history. So if an attacker wanted to attack the network, he would have to actually convince the majority of the nodes, which are the computers on the network, about a certain past. So if you wanted to rewrite the past, let's say you wanted to convince the network that you had made a transaction over a large amount of Bitcoin in the past, and you would have to do that in order to convince the majority of the network. That's known as the so-called 51% attack. And in order to prevent that, with that algorithm, there are several algorithms nowadays out there, but Bitcoin uses proof of work. That is prevented by actually you have to spend electricity because you have to run these hash functions.
And so, this proof of work is what they mean when they talk about mining. They spend electricity to guess what the data that goes into the hash.
The mining function is basically, so if you participate actively, meaning you have the full stack network, you have the full software installed, actually you actively participate in the network and you try to solve the mathematical puzzle. So solving the mathematical puzzle is basically, let me go one step back on this, what it is before actually. The variable length input on the hash function is basically transactions. So transactions on the network, let's say between you and me, basically you have public key infrastructure or public key cryptography, meaning I have a private key with which I sign a transaction, and you have a public key. And so if I want to send a Bitcoin to you, I need your public key, which is public, which is available. So I make that transaction and I shout it out onto the network. Remember, it's a peer-to-peer network, so everybody will listen to it. The nodes who actively participate, they will actually take that transaction.
So the network will find out that your public key sent money to my public key.
Yes, they will see, indeed. They will see those transactions. This transaction is made, and they will see, they will realize, has this transaction been made before or not? And this is what those nodes will look at. And before it's in a pool of actually transactions which are not being treated yet. You have to give higher fees in order to make sure your transaction will be processed in time.
Who gets the fees?
Actually, it goes to
the network, participants of the network.
Exactly, yeah. So those miners, they try to solve a mathematical puzzle. It's based on difficulty levels. It varies, and then actually they take those transactions and try to put them into blocks. So they have variable length input, several transactions together, put them as output, and now how the blockchain comes. So you have, as I mentioned earlier, if you take one bit as input, it will change the output. Actually, on the previous block, there is an identifier. And this identifier, you put it also part of the input in the hash function. And that links those data structures together. And this is how the blockchain comes together. And this is how you can say, the longer you in the past, so the older the block is, the more secure it is, because more and more computing power has run over it. More and more blocks and hash functions have run over it. So it's considered usually after 6 blocks. So, and in Bitcoin, the block generation is about 10 minutes. After an hour, it's secure and your transaction is safe.
And does that mean that, like, like every 10 minutes a new Bitcoin grows, or that can be mined?
This is basically the mining part, and it's basically a block. It's known as the block reward. So, and this is again, it's just the consequence in order to make the network secure, because the people who do this, they burn energy, and you need to pay them basically. At the beginning in 2009, the block reward was per block 50 Bitcoin. So, and every 4 years it halves. So at the moment we're at about. I think we have 12.5. We have 12.5 Bitcoin. So there's 625,000 blocks per year, something like that. And so this will halve. And actually, in 2024, there will be no more. No more block reward. There will be no more block reward. No more generated.
Because there will be no more Bitcoin. There's a finite number of Bitcoin.
There's a finite number built into the protocol, and that creates scarcity. So,
but will then people still be motivated to process those blocks?
Yes, by fees. So then fees will be the, let's say, the element which makes this actually go forward. And if you think of Bitcoin really as digital gold, that is really the closest association.
But for the blocks, a lot of people on the network, they all have to spend their computing power to manage that process, right? But only one of them gets the prize.
Exactly. So it can also be a mining pool. So you have computers, and this is why people say, well, Bitcoin is no longer really decentralized, because you have groups of people who come together and try to solve that mathematical puzzle. That's let's say one criticism. So let's say some critics talk about on Bitcoin. But yeah, basically, and the node or the group of nodes, the mining pool, which has solved the mathematical puzzle, will shout it out, and all the others will be able to verify it. Remember what I said earlier about the hash function? It's easy to verify. They can verify, and then they move on and then continue with new blocks.
But is the solving of the puzzle a function of only computer power, or is it luck also? Because I imagine that if we have 10 computers trying to solve a puzzle, there's a high chance that computer 2 will solve 5 of them, and computer 9 will not get any of them.
Well, it's both actually. As they're really randomly trying, so they're really guessing. It's also known as brute forcing, if you like. It's actually it is luck. However, the more computing power you have, the more higher the chance, and that's why Bitcoin has gone through 4 hardware iterations. So it started really off with CPUs, but nowadays we are with so-called ASIC, application-specific integrated circuits, and this is hardware which is very, very expensive and expensive to run. And the energy consumption. So basically, the miners need to be professionals, and that's why you have some projects which have forked off of the Bitcoin core network and who try to address that. But
are the miners good guys or bad guys? Because if I'm someone who owns Bitcoin, let's say, and then there are these miners out there doing this, are they somehow breaking the code and spoiling the whole thing, or are they making it grow?
No. They're not spoiling it. They don't change the code. If you change the code, you would have something which is known as a fork. And for that, in order to be a fork successful, you need to convince the community. You need to have enough people who support it, because otherwise your fork will just die out. And there has been one fork which was initiated mostly by miners because of this problem of block size, and today it's called Bitcoin Cash. That was the second fork last year which happened, and there actually the block size was being made larger.
But in general, you think this is a sustainable thing, that this is something that will that has inherent value in itself, and will prove to carry that value over long term?
Well, I think Bitcoin is here to stay. So if I look back 3 years ago, everything wasn't so 100% clear in how things work out and so forth. In my opinion, Bitcoin is here to stay. Whether it's sustainable in terms of energy consumption, green planet, and all of this, we just have to remember this is the underlying algorithm, and the algorithm can be changed at some point in time. Just enough people have to put their head around and say, look, let's do something else. And I mean, it's not that simple, because there have been, let's say, long discussions in the past how governance problems really, because Bitcoin was never meant to be governed. So there were long discussions, but in essence, this is possible. And if you think of quantum computing, which can put a threat actually to this type of algorithm, then I'm pretty sure if it really, we have already quantum computers, commercial quantum computers out there, but when they become, let's say, more used and so forth, I think people will then change the underlying algorithms and so forth. So,
a threat in the sense that they could break the code and go back, as you say, and change history.
Exactly.
They could do it, just mine it very quickly, right?
Yeah.
Process the whole thing very quickly.
So that's the first of our episodes on Bitcoin, the first of two. The second one coming next week will look, as we said, at some more real-world applications of Bitcoin, if there is such a thing as the real world. Am I getting too philosophical there?
I don't know, and I don't know if there are any real-world applications of Bitcoin either, but I'm sure we'll find out.
Well, tune in next week, as they used to say in the days of radio, or subscribe, as they say now, to this podcast on iTunes, on Stitcher, and on Spotify.
Yes, finally on Spotify as well. And also get in touch with us on Twitter. I'm at Allartankler, ALLARTANKLER.
I'm at EIBMatt, EIBMATT. You could also tweet at Taylor Swift and tell her that on Spotify she can listen to A Dictionary of Finance, which is probably what she wants to do in her spare time.